Hey, what's up, everybody? Let's talk about the Joe Biden tax plan. I will do a video on Donald Trump's tax plan as well. I am a tax guy, I'm a CPA, I deal with individual and small business taxes. I'm not going to go beyond this. There are a lot of reasons to vote or not vote for somebody well beyond their tax plan, but this is the space I deal in. So I'm going to cover in this video a high-level summary of what we currently know about Joe Biden's tax plan. So let's jump right in. First of all, the thing that we hear over and over again is that Joe Biden is not going to increase taxes on anyone making less than $400,000 a year. It's pretty safe to say that because there's not a lot of people making more than $400,000 a year. Statistically speaking, looking right now, 94%, based on 2018 tax returns, which is the last data the IRS has released, at this point, 94% of taxpayers had an adjusted gross income of less than $200,000. The next point where they do the cap is at 500,000. So we don't have it specifically at that 400,000 mark, but 94% are less than 200,000, and 98.9% are under 500,000. So we're talking somewhere in the 2, maybe 3% range of people who will have to pay more taxes if Joe Biden keeps this promise of not raising any taxes on anyone making less than $400,000 a year. So let's jump into how he plans on doing that. So Joe Biden says that he will repeal the Tax Cuts and Jobs Act components for high-income filers. Now, again, every time I hear a high-income filer, I'm thinking with Joe Biden, he's referring to this $400,000 mark, okay? So he wants to revert the top tax bracket from 37%, which the Tax Cuts and Jobs Act dropped that tax bracket to 37% as the highest tax bracket. Biden wants to revert that back to 39.6%. Currently, that 37% bracket kicks in for a single individual with taxable income of $518,400, or a married filing joint couple with taxable income of $622,050. So that's where that 37% kicks in right now. Again, we're looking at 2% of the population that are paying that tax. That's kicking in there now. He wants to revert that back to 39.6%. Also, long-term capital gains currently get preferential tax treatment, where if you hold a capital asset for more than 1 year, you get that preferred treatment. If you're in the lower tax brackets, that long-term capital gains tax can actually be 0%. You can pay no income tax on those. So that's very beneficial for those of us who might qualify for that treatment for long-term capital gains. Then you get into the higher tax brackets, you start paying 15%, which is still less than your current ordinary income tax rate. And eventually the long-term capital gains cap out at 20%. So you could have someone making $3 million a year, and their long-term capital gains tax rate is going to cap out at 20%. Now, there are some other things that kind of come into play there, like maybe the net investment income tax that could actually effectively raise that up a little bit. But speaking of the long-term capital gains tax, that's where we're at right now, that 20%. Joe Biden wants to increase that to where if you make more than $1 million, so this is on income above $1 million, he wants to do away with that preferential tax treatment for long-term capital gains, as well as qualified dividends, which get treated the same way as long-term capital gains. He wants to tax them at your ordinary income tax rate. So instead of that preferential tax treatment for the long-term capital gains, anyone with more than $1 million of income is going to pay ordinary income tax rate, or the new tax bracket of 39.6% on those long-term capital gains. So you're talking double the amount of tax for the people making more than $1 million on that long-term capital gains income. And he also wants to cap the tax benefit of itemized deductions to 28% for people making more than $400,000. So basically that means, you're not going to get a benefit of your itemized deductions beyond the 28% tax bracket. He wants to cap it there. He wants to restore the piece limitation. So without going into details, the piece limitation basically just reduced. You added up your itemized deduction, and then if you made over a certain amount, they would reduce that deduction so that you got a percentage of it instead of the full amount. He wants to restore that piece limitation on itemized deductions for people making income more than $400,000. So itemized deductions being limited basically for people making more than 400,000 a year. Also wants to phase out the new QBI, qualified business income. So this is a new deduction that came out of the Tax Cuts and Jobs Act and allowed you to deduct some of your qualified business income against your taxable income. Wants to phase that out for anyone making above $400,000 a year. So again, you see in there this $400,000 a year limit. As I mentioned before, very few people in that limit. So probably very few of you watching this are actually going to be affected by that. So then the question is, do you think maybe one day you'll be there? And so you don't want taxes higher on those people. That's one factor. The other factor is, what do you think the macroeconomic impact of taxing the higher income earners will be? It's not something I'm going to do an analysis of here. That gets a lot more into the political side of things than what I want to do here. I just want to give you the tax facts and statistics so that you can have the accurate data to then make those other analysis and decisions on your own behalf. So let's get into a couple more things. So he wants to impose the 12.4% Social Security payroll tax for wages above $400,000. Now, these are your Social Security and Medicare or your FICA taxes that are being withheld from your paycheck. Currently, that caps out at $137,700. He wants to restore it and bring it back into play for anyone making above $400,000. So you'd pay it up to $137,700. Wages between that and $400,000 still would not be taxed, this payroll tax. And then anyone making above $400,000 would then have to start paying the Social Security piece of the payroll taxes again. The next thing he wants to do is temporarily increase the child tax credit. So now we're getting into some of the items that will help the lower income taxpayers who, again, are part of this other 96 to 98% making less than $400,000. So to temporarily increase the child tax credit, currently it's $2,000 per child. Of that, $1,200 of it is refundable. I'm not going to really get into the details of all that right now, but he wants to temporarily, for as long as economic conditions kind of continue to be what they are and require this in his terminology, wants to increase that from $2,000 to $3,000 per child and make the full $3,000 refundable. So this could significantly impact how much taxes are offset by this credit, or if they're fully refundable, how much additional money you might get refunded when you do your tax return, even if it exceeds your tax liability. So that's a big one that could put a lot more money back into people's pockets. The next one is to expand the child dependent care tax credit. So this is if you have to have a disabled child or parent or an elderly parent or a young child who needs dependent care so that both you and your spouse can work if you're married, or so that you can work if you're single or head of household, then you're entitled to a credit for the money you spend needing that dependent care so that you can work. But it wants to expand that from $3,000 with a cap of $6,000 to $8,000 per child with a cap of $16,000. So that is massive increase there. Also wants to increase the percentage that you calculate that on from 35% to 50% as the top percentage to use. So again, not really getting into the details here, but if you're utilizing that child dependent care tax credit, talking about a pretty significant increase in that credit. Also, expanding the earned income tax credit for childless workers above 65. So right now, they would not qualify for that, but the earned income tax credit would be expanded for them. Also, he wants to reestablish the first-time homebuyer credit. So if you remember, it was around 2008, I believe, where this first-time homebuyer credit came out. There was one or 2 years where it was $8,000 and you had to pay it back over time, but you got this $8,000 that you could pay back over the next several years. It was kind of like an interest-free loan. Then it was made where you didn't have to pay it back unless you sold the home and had a gain on the sale of the house. So anyway, he wants to reestablish that for up to $15,000. I don't necessarily know the details on if any of it will be paid back or anything, but that's what I've read so far. Is he wants to reestablish that, and it would be up to $15,000 for first-time home buyers. Now, those are a lot of the individual elements. I'm going to go into a few of the corporate ones as well. I'm going to touch on these much quicker and stay very high level on these. But wants to increase the corporate income tax rate, the Tax Cuts and Jobs Act, drop that down to a flat 21% permanently. Wants to increase that up to 28% now. So an increase of 7% there on corporate income tax. Also wants to make a minimum tax on corporate book income. Not going to get into the differences here, but your your taxable income and your book income could be different. One reason might be depreciation, accelerated depreciation for tax purposes that you don't have on book income. But this is only for corporations making more than $100 million of net profit on the book income, where they might not be showing any taxable income potentially, or less taxable income than that. So it would be kind of a minimum tax, where it would either be the lesser of 15% of that book income or whatever the ordinary tax calculation comes out to be. So again, this one isn't necessarily for you. I don't expect that a whole lot of viewers out there are running corporations with net income of more than $100 million. But this goes into, funding the federal deficit, balancing the budget, raising revenue as a whole. And so this is one of the factors that's in there. There's a couple with kind of offshore international income as well I won't go into. But the last thing that I will talk about is offering a tax credit to small businesses who adopt workplace retirement savings plans. So this could be something that if you run your own business, have a small company with employees, where you could benefit from this tax credit for setting up retirement plans within your organization and offering those to your employees. So that's a very high level, kind of quick bullet points. I've been to joebiden.com, kind of read through what they've laid out there for their tax plans. I've also been to, I had it up here a minute ago, taxfoundation.org is one of the websites that I've been to as well. They do a great job of going kind of summary level, but then also digging in depth. I'll put a link to that in the description of the video if you want to read more in depth. They also have some podcasts on there that you can listen to, because I'm probably not going to take the time between now and November to really go in depth on these, but I wanted to give you that big high level overview. No political commentary there, just basically the straightforward facts on the tax plan as it's laid out right now. I will do a video on Donald Trump's tax plan as well, so look for that. Make sure that you like this video, share it for anyone who might benefit from hearing it. Don't forget to subscribe to the channel and hit the bell so you get notified of other videos, including the Trump tax plan video once I publish it. My name is Brad. I'm with Wooten CPA. I hope to bring peace to your finance and tax responsibilities. Thanks for watching.